Hi, and welcome to Carnegie and our interview with Ependion. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Jenny Sjödahl, who is CEO at Ependion. Hi, Jenny.
Hi there.
So you just released Q1 earnings, and maybe we start with the broader question: overall market order intake fell year on year, but rose compared to Q4. Try to describe a little bit what the state of the market is and how you see underlying demand.
Yeah. So as we have seen the last quarters, actually, it's a bit of a mixed picture, and you need to look at the two business entities separately, basically, because in Beijer Electronics, we are seeing the same kind of softer market that we have been seeing now for quite a while. That has not changed, and it's driven mainly by the Asian market showing a weak demand. In Westermo, however, the picture is slightly different. First of all, we have a comparison quarter that is extremely high due to our largest customer extending their order horizon in the first half of last year. But if you kind of disregard that, we can see that we have a pretty good underlying demand in our key segments. The energy segment is actually up quite significantly compared to the comparison quarter. The train network segment, which is where we have kind of the comparison difficulty, is on a similar level if you disregard those special effects as last year. And so in Westermo, I see that we have somewhat a softer market. Projects are taking a little bit longer to close and so on, and I think that is related to the high interest rates and so on. But overall, and looking at the midterm in Westermo, I'm feeling quite optimistic, actually, that we are in a good spot with our positioning and so on. So it's a little bit of a mixed picture in the quarter, driven by a little bit softer market demand right now.
And I was thinking that maybe we do actually split them and go business area by business area, starting with Westermo. You were referring to the large train customer which changed order horizons in the beginning of last year,
Yes.
which has caused a distortion. And from what I understand, the orders from these customers were then below normal in the second half of last year. How is this customer acting now?
Yes, that is correct. And now in the first quarter, and of course it's hard to judge by just one quarter, but now in the first quarter we are seeing a more normalized order level from that particular customer. So let's see what happens going forward.
But it's normalizing a bit at least.
Yes, it is definitely.
From what you can see now.
Yeah.
And then you were also referring, you said that the energy segment is actually growing. Is it growing both sequentially and year on year?
Yes, it is growing both sequentially and year on year. And in particular, I could say that our wireless portfolio related to the energy segment, mainly out of our Westermo Ireland unit, is performing very well.
And what about Trackside?
Yeah, there we can see that the order intake compared to same quarter last year is kind of moving sideways. But on the other hand, on the sales side, we're seeing a big increase because of some delivery issues that we had beginning of last year. So, but I believe over time now that Trackside is going to be a very interesting segment for Westermo. There are lots of opportunities in that area.
I think you were saying also on the conference call that you actually, because of the position you have on the train side, you also get invited to most discussions and tenderings that are going on Trackside as well.
Yeah, that is definitely true. We can see now that over the years, Westermo has built an extremely strong brand name in the rail industry, meaning that customers actually even come to us when they have projects related to rail and also then, of course, Trackside. So we can definitely build on that strong position and the trust that we have in the industry to gain even more business in the Trackside area.
Let's talk about the expansion. You have two expansions that you highlight. You have the Indian expansion. A little bit how about that is progressing and maybe the reasons behind the expansion, the timing? And then also basically the same question in Denmark. You are establishing a sales unit in Denmark, and what's behind that establishment?
Yeah, let's start with India, a market that is slightly bigger than Denmark, obviously. But yes, we took the decision in the last quarter to establish Westermo in India, and that is due to a few things. First of all, we want to follow our big train manufacturers that are customers of ours into the Indian market. There is a big demand in India on content. So in order for our customers to be successful on the Indian booming rail market, they need to show that more than 50% of the content of their bid is actually manufactured in India. So that is a big driving force for us to be able to support our customers locally. But in addition to that, we also see great growth opportunities also in the energy sector in India, because there's a lot of investment going into renewables, into the grid infrastructure and so on. So even though our main focus initially is going to be rail, we are definitely going to start looking also on the energy side. So I feel that the timing is good now, because India is by far the market in the world where we will see the most investment in infrastructure in the coming years.
Does it feel like India is at an inflection point at the moment?
Yes, that's so that feels absolutely right strategically and timing wise right now. If you look at Denmark, it's obviously a much smaller market, but it's kind of a little bit like our home market, very close to Sweden, and it's a market that we have been serving through a distributor up until now. But we feel that it's time for us to actually have our own Westermo entity in Denmark, which we have now established, starting with one salesperson and then supporting that salesperson out of our Swedish organization. And it's especially the energy market in Denmark that is our target market, you can say. So that's also a good step forward.
Moving on to Beijer Electronics, we talked a little bit about Asia. So Asia continues to pressure the entity. Would you say that Asia has deteriorated further, or that is stable at the low level?
I would say that it has stabilized on a very low level. So and it's really hard to tell when that market is going to pick up again. We don't want to speculate in that, but at the same time, we are also looking at our sales organization in Asia, and we have done some important changes there to the sales leadership, and that is also an important factor for us to step up our sales work also in a soft market. So we are taking actions to, even though the market is a little bit slower, to actually find new customers and start to grow the business again.
And Europe is growing, North America is stable. What's driving Europe?
I think it's driven by the fact that our customers here, we have a very strong customer base in Europe, a lot of customers for Beijer Electronics in Europe. And I think that they are depleting their stock levels now and starting to place orders again. And Europe overall is doing quite well in terms of economic activity in general. So yeah, that is looking quite positive, I think.
And talking about the margins, you defended margins quite well in electronics, and they bounced back from what we saw in Q4. So you came back to kind of 13%, which is quite high from a historical level, especially when revenues are falling the way they are right now. What are the main drivers behind this expansion?
I think it's two things. First of all, we had a more favorable product mix in Beijer Electronics in the first quarter, with the display solution product portion being lower, where we know we have lower margins. But the other factor is that material costs are coming down a little bit now, and we have managed to keep price levels up in quite a good way. And also, in addition, the cost-saving restructuring program that we did in the fourth quarter has also had effect now on the cost level. So it's a number of things combined that give those stronger margins.
But with, I mean, you referred to cost savings. There's material cost which is no longer going up, and then price price increases which are still there and impacting a bit, should mean that the 13% should be more representative than the 8% we saw in Q4 without giving any kind of forward-looking statement.
Yes.
And then you presented a new strategy during the quarter, or just before, but at the CMD in March, where you will focus on marine manufacturing and solutions for demanding environments. How is the implementation going?
I think it's going really well. The strategy has been communicated in the entire organization. I think that our employees the reception of the strategy is very positive. People are seeing more focus now and a clearer view on where we should be focusing going forward. So I think we're off to a great start in the strategy implementation. Then obviously, of course, it takes time for everything to come into effect, but I think it started off really well.
And then in your outlook statement, you talk about the mixed picture for 2024. And at the conference call, you were talking about stepping on the pedal and braking at the same time. Talk a little bit about how you view the market in the short term, but also in the medium to long term.
Yeah, if we start by the medium and long term, I am very optimistic about our development. I think we are very well positioned in very attractive markets that are bound to grow thanks to the big mega trends like digitalization, sustainability, electrification, and so on. So I'm not at all worried in the medium to long term. In the short term, it is a little bit difficult to tell what is going to happen. And we know that things can change quite fast. You know, also during a 12-month period, there could be quite dramatic changes happening. So, and I don't want to speculate about how the market will develop for 2024 because we don't really have data to say anything about what's going to happen that we can really feel confident about. So we're a little bit following the development very closely now. We are ready to take actions if and when needed. But our hope is, of course, that we will see a pickup in the second half of the year and that, you know, the kind of softer market that we have been seeing for some time now will actually start to stabilize as interest rates come down and so on. So, yeah, that's my view.
So without putting words in your mouth, but both at the CMD and in previous conversations like this one, you've been quite confident about the future. There is nothing here in this report that changes this view.
No, definitely not.
Right. With that, Jenny, thank you very much for coming here to talk to us.
Thank you, Marcus.
And speak to you soon.
Thank you. Bye.